The neutral interest rate, if you actually had a conservative bank, would be 16% interest rate in the US dollar. We're not there. We're not getting there.
Hello and welcome to Wealthy Value. In today's video, Bitcoin bull and MicroStrategy CEO Michael Saylor updates on the most recent Luna and Terra meltdown, his approach towards crypto markets amid inflationary pressures and the impact of recent volatility and crashes on Bitcoin. Saylor believes that the markets are going into a withdrawal due to Fed's poor policies and all other cryptos except Bitcoin are unstable and a risk to buy. Make sure to stick around till the end of this video where Michael Saylor reveals why he thinks that right now is the best opportunity to buy Bitcoin. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
So if you're a trader, you go through this perverse thing of, oh, they're going to raise interest rates 75 basis points or 50 basis points, or they said they wouldn't raise it. When they weren't going to raise interest rates 75 basis points, the market rallies. When inflation is worse than you expected, the market tanks. If inflation is worse than you expected, you really ought to be buying the inflation hedge, which is Bitcoin. People that don't really understand how Bitcoin works are just trading it based upon a back-tested model. So the back-tested model says it's correlated to risk assets with higher volatility. So therefore, if I think risk is going to trade off, I should trade it. Again, they're traders. The traders are in a tug of war with the technocrats. The technocrats are bearish. They're afraid. The traders are mercenary, right? They'll just make a buck. The maximalists are already all in. We're dollar cost averaging. So we're kind of along for the ride. And the Fed's going to control the mood of the traders and the technocrats in the near term. And the Fed's jerking everybody around. But in time, if the economy actually truly compresses, someone will come back and they'll. If you look at the macro climate, in the middle of 2020, Jerome Powell said, we're not even thinking about it raising interest rates until the year 2024. So then we had the Fed basically buying $120 billion a month worth of bonds, and interest rates plugged at zero. And then everybody said, well, there's inflation, but the politicians said there's no inflation for a year, even though we had massive hyperinflation in assets for a year. But, they denied the inflation. And this is a result of them just tracking the CPI index, right? Because, as we talked about before, CPI is one out of many inflation metrics you could measure. So they track the one that is going to have the longest lag. Because if you lock people down for a year and they can't take a cruise and they can't go to a concert and they can't go to a restaurant, then they can't consume. So if you can't consume consumer products, you can't, by definition, you can't have inflation in those products. There's no demand. So the later, there's a lag in some demands, like it takes you 6 months to buy a house. So there's a slight lag in house prices. There's no lag at all in asset prices, like bonds hyperinflated in minutes, equities hyperinflated. The Amazon price, hyperinflated, it went to $3,400 from $1,800, like in a short period of time. So I think the politicians, from a monetary point of view, they looked at the wrong indicator and they waited and they waited. And they still only had raised interest rates like 25 basis points as of a couple of days ago, right? There's tons of inflation and we have to go faster. And I think like this morning, these 8.5% inflation number came out and it was higher than people expected. And then the markets think. I think that this is first order, second derivative type stuff. We're still in an inflationary environment. And they're not really tightening to the extent they need to stop that. Like the theoretical interest rate you would tighten to stop 8.5% true inflation is 9%. In a year and a half, when the interest rate is 2.5%, it will still be less than 8.5%. The neutral interest rate, if you actually had a conservative bank, would be 16% interest rate in the US dollar. We're not there. We're not getting there. We're not going anywhere near there. And every prescription I've seen is inflationary. I think the big lesson is that all of these cryptos, other than Bitcoin, are securities. And if they're securities, that means that there are management teams and there are policies. And the question is, what's the reserve backing the coin, and what are the policies backing the coin, right? And so I can't really tell you what the reserves were or are with UST, and I can't tell you what the policies were, right? Because there aren't 200 pages of SEC filings that explain to you that, right? No one in the world knows what the reserves are for Tether. You know, you kind of have a vague idea, but you don't really know. And what are the policies? You know a little bit more, but you still don't really know what are the reserves of the other stable coins. So the whole point of the regulators like Gary Gensler is their securities. There should be full disclosures. The disclosures require armies of lawyers and accountants, right? They slow things down. You know, you can't go fast and break things when you're dealing with that much money. You have to actually disclose everything. And people ought to know what they're investing in. So if you buy MicroStrategy stock, you can read all of our bond terms. They're published. We publish the terms of the Silvergate loan, the terms of the converts, the terms of the junk bond. You can read them, right? You can read the financial statements of the company. You can read about who governs the company, right? You know who the shareholders of the company are. You know every single time any material thing changes, right, via an 8K. That's the way that securities work when you're responsible for large sums of other people's money. I think that the crypto industry is immature. It's going to grow up, right? It needs to. We're crossing the chasm from entrepreneurial driven entities to institutional entities. And one thing that institutions do is they have very sophisticated systems for providing transparency, you know, and they have like 3 attorneys to figure out when you write the sentence saying exactly who does what when, how do you punctuate it, and is there any confusion? If there is some confusion, that's a problem. That's why people obsess over these things.
So what are your thoughts about Luna and Terra's recent market crash? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.